Tom, how was your day?
Yes, Peter.
How was your day?
Today was an epic day. I love when something completely unexpected happens that doesn't hurt me, that doesn't bother me. It's sort of like a mini chaotic episode. We just have to jump on the stream and talk about it.
Look, I talked to you earlier today. Well, this morning I wake up, I get a text message from Tom, and you write, I got to make sure that I can say what you wrote, because sometimes you write things I can't say. You sent me this image, and it's an image of a chart. I mean, I didn't know what this chart was right now. I mean, I can't really show it to you, but anyway, you can't really see it there. And it's just a line that goes like right up. Do you have that chart on your screen, Tom?
I do have that chart. 1 second. Right here. Right there.
Yeah, that's the chart he sends me this morning. So I wake up, I go, what is this? Is that Bitcoin? What's that? And he says, and he tells me, and that's why you never naked short. The orange bar at the top, that's 50% higher than the previous closing green candle. That was itself an all-time high, is how you end up not having a good time. I'm not going to say exactly what you said. Not having a good time. Having a bad day. Tom, I don't even really know how to pose the questions here, because even after you've explained it to me, I know people were short squeezing GameStop. Go.
All right, let me tell you about the GameStop here. Right? Oh, I can't even wait to tell you this. Right? So just in case you don't know, or people don't know, GameStop is a retailer. They sell video games. On disc, they sell video games, and their whole business model is that you can return games that you purchase. Right, you purchase $60 game, you return it to GameStop. They give you $8 on the game on store credit, and then they resell it for like 40. Right, great business model. They're making money hand over fist until people are like, "This is ridiculous.
It's like pawn shop.
Why am I giving a $60 game?" Yeah. Well, at first they were giving they were giving a lot of the value of the game back. But then as digital games came on the market, their margins became smaller and they give you less and less and less and less and less. But there's not a lot of competition in the space. So they're like the place you go for physical ones. In Canada, it's EB Games. They're called EB Games here, but it's all the same thing, GameStop. Okay. So their stock, look, I'll show you the chart over here. So their stock has been steadily going down over the last few years, right? It peaked in 2007. Let me get it here. It peaked in 2007, again a little bit in 2014, and then it's just been a straight down. Can you see that there?
I can see it.
So it got as low as
wait, hang on. That doesn't look like
$2.
That doesn't look like a straight down to me. Like you say straight down, I see straight up, but is that what we should consider?
It's a trend. It never got back. It never got back. When it doesn't get back to a high, we don't care if it goes up and down. Everything goes up and down. What's important? What is the trend?
Gotcha.
And this has been trending downwards. So it got all the way as low as $2.57. Now, you can imagine people have been making money shorting the stock, betting that the price will go down lower for years since 2016. It's been like basically surefire money. Well, what happened was that when a stock is being shorted, it actually creates more shares. This is one of the benefits of shorting, that because you're borrowing someone else's shares and you're shorting it, the market, it looks like there's more shares around, right? Because someone's buying those shares. So it looks like there's more shares around than there actually are. It actually creates a bunch of synthetic shares that are out there. So you can imagine that the company, GameStop, issued a bunch of shares, 25 million shares, and those are floating around, being traded back and forth between people. And what happens is that eventually the amount of shares that are shorted can, in this case, equal the amount of shares that are available to buy. So that means since those who are shorting the stock have to buy back.
There's no shares for them to buy,
right? They're shorting. There's no shares for them to buy. So then, and because the price gets so low, there's a bunch of people who are not like, they're like, I'm not buying the stock, right? I'm not interested in buying the stock. There's not enough shares anyway. It just keeps going down. So it gets to this bottom. It gets to this bottom level. Well, There's a thing that companies do called buybacks, where in order to make their share price go up, they buy a bunch of shares from the market to take it off the market. And supply and demand tells us if you reduce the supply and demand is still there, price goes up. So the price goes up a little bit. So the price might go up over here. I'll switch back. The price might go up from $2.50 and go up to $7, right?
Mm-hmm.
Now, when it goes up to $7, the guy who's shorting it at $5, the guy who's shorting it here, he's got to buy the shares back, right? He's already down. He's like, this is up to $7. I bought it at $5. I'm down $2 per share. I gotta buy it back. So if they start buying back the shares, which
he buys it back, but he's still losing because he has to buy it back at double money or triple the amount that he planned.
That's
so
right.
Already he's losing. If he can find shares, he's still losing.
Exactly. That's
and
right.
That's at $7.
He might be getting a margin call.
Okay.
Right. He might be getting a margin call. The bank says, "Hey, look, this bet's going against you. You gotta buy back the shares now." So he's to buy back the shares, and he's got to buy it back. There's no shares, right?
Mm-hmm.
There's no shares available, so he's got to buy it back at the next highest price that he can get it. So the price goes up to solicit someone to sell these shares. So some guy's like, "Yeah, okay, I'll sell it to you for $10, right?" And so on the chart, it ticks up $10 for the share. So then other people who were short at $12, they're like, "Hey, wait a second, this price is set it up. This price just went up 400%. I better buy back these shares to sweet before I get a margin call." Or some people already in margin calls. So it causes all these shorts who have to buy the shares back to scramble and scramble and scramble, and they chase the price up. Then there are people who are like, "Hey, these shorts are scared. They got to chase this price up. If I buy it now at $15, I know for sure it's going to get up to $20. So I can just buy shares at $15 right now. I know it's got to go up $5 because those guys bought it at $20. They're going to have to cover at some point. So it's guaranteed money for me. So I tell my friends, "Hey, buddies, let's just get in here and let's buy these shares because they have to buy. We know they have to buy it back.
But
right?
if they have to buy it back, but at that point, will there be enough shares? Like, okay, if they have to buy it back, if they don't have money, then they're not buying it back.
No, the bank buys it back for them, and then they owe the bank. Right, that's where your margin call comes in. Now you owe the bank a bunch of money,
I see.
But automatically it buys it, right? Or they have money and they use that money to buy it back so they don't lose everything. But one way or another, the shares are being purchased. Like when you borrow shares to short, the shares they get bought back.
All right.
You might not have your home anymore. You might be bankrupt, but those shares get purchased back. Okay. So then so the stock went from $2.50, 57 cents, and it gets all the way up to $40. All right. That's $40. I'll show you right here. It gets up to last Friday or whatever, it gets up to $40, which is here's about. All right. Then there's these huge companies, hedge funds, that are some of them pride themselves on short in stock, right? They pride themselves on short in stock, and so the CEO of one of these hedge funds went online, and he was trying to do a cautionary video, right, to help people out. He goes, "Look,
I heard about
guys,
this.
You don't know what you're doing here. The stock really is valued at $20. It's at $40 right now. If you're buying it now, you're gonna lose your shirt." Sort of like talking to the little people. He really came off as he's talking to the little people. "Let me tell you, little boys and girls, how this is gonna work. I'm giving you a cautionary thing right now. Get out while you still can, because things are gonna go bad. It's $40. You know how much money we have. You know how many people are short in this. This is going down the tubes." But he was really, he really came off as an ass. The thing is, he pissed off a Reddit thread called Wall Street Bets. And this is a Reddit thread with 2 million subscribers. And they listen to it, they trade each other's bets, they talk, they go, "Oh, we're gonna buy this, we're gonna sell that." It's a forum, they're collaborating. And they saw this video where this guy was basically, dumping on them, calling them losers, like, "You don't know what you're doing." So they all decided they're gonna buy GameStop.
Okay, wait, hang on,
force
hang on.
a short squeeze.
He tells them, look, this price is too high. It's not good. Don't buy it. It's worth less than this. And these guys in the Wall Street Bets Reddit group online, they decide, hey, this guy is talking down to us. Instead of doing what he wants, which is don't get into this media frenzy, don't buy the stock, which will only cause the price to go up. They decide, hey,
he's saying the price won't go up. He's saying the price won't go up. He's saying you guys can't make a short squeeze happen. I know you think so, but we'll just keep shorting it. We got billions of dollars. We'll get the price down eventually. We'll just keep selling it.
Oh.
We'll just keep selling it and selling it. You can't do anything to us.
So then
we have billions of dollars.
So, but then why did it go up to begin with? Why didn't they just correct it when it was at 20 or 30 or whatever?
They were, but what they were doing was underestimating the power of retail investors. These are institutional investors, and they thought they're just a few people driving the price up a bit, right? Because there's no shares, right? There's none of the shares there, and all it takes, like the price you see for a share, all that means is that is the next price someone will buy it at. It doesn't tell you how many shares are there or anything like that. So, if only 2 people are trading it, right? And I want to buy the stock from you, well, I got to buy it at whatever price you're willing to sell it at. So just because the stock price says $40 doesn't mean that there's millions of people waiting to sell the stock at $40. Mm-hmm. There could just be a few people. You saw a price can move very drastically. But it also goes down the other end drastically, right? As soon as someone goes, oh, okay, this stock is not worth anything, it could be worth $8 in no time. But what this guy did was drastically underestimate the power of massive amounts of internet people who are trading at home and COVID, nothing to do.
I love hearing that. Okay, that's what Happy for Change is all about. Mobilizing people online to do great things. And here's a group of people on Reddit we never even heard of causing grief to this billionaire. Or $1 billion company.
Right. So they caused the stock. It's at $40 last Friday. The guy put out the video. During that day, the stock goes from $40 to $60. All right. It goes up 50% in the day. It closes at $60, and then over the weekend until today, the stock goes from $60 to $159. Now,
hang on.
Billions and billions of dollars.
Wait. This story started, we were talking about $7.
$2.57.
And now we're at to $159
per share, exactly.
So, I mean, people must have made a ton of money?
Like a 4,000% increase. Sorry?
People must have made a ton of money?
Yeah.
So it's a good day.
If you just bought the stock, if you bought the stock at you put $500 in, you made $19,000. If you bought options on the stock, a $500 position in options might have made you $100,000. But think of it, you're like, where does this $100,000 come from? It comes from the other side. The people on the other side who need this insurance now are willing to pay an arm and a leg to cover themselves, because options are insurance. So there are multi-billion-dollar firms that were short GameStop that got wrung out. We don't know the details yet. We'll find out over time. But it looks like at least one hedge fund, one multi-billion-dollar hedge fund, must have gone belly up because of this. Because it doesn't matter that if the stock comes down tomorrow, the margin call happens today, right? The bank doesn't care if the stock drops by 1,000% tomorrow. You owe that money to SWIFT.
So how many people are in this Reddit group?
2 million people in the Reddit group.
2 million people, folks.
Well, we don't know how it's mobilized, right? We don't know exactly. We don't know how all it. It could have been a bunch of people then went long. Other hedge funds would have been like, oh my God, we know these other hedge funds on the other side of this bet, and all you need is for a minority of people to come together, and it causes this momentum. And there are these computer algorithms that trade a stock, and there might be some computer algorithms out there that says if a stock moves up 5% and the amount of shorts equal this much to the amount of shares, buy $1 billion worth of it. if it moves up 10%, buy $5 billion more. Like it could just snowball until you have this insane thing where the price goes all the way up to 159. So, Peter, this over here, this peak that we're seeing over here, which is 2007, that's the height of the financial bubble, right? Is it $63? The price went twice as high as that.
Oh my God.
Here's the funny thing, Peter. Here's the cautionary tale. So today, so this week, you see this candle here? You see how it's, can you see how it's half green and half red?
Yeah.
That means some people, retailers, bought the share at $140, let's say. All right? Because they're like, well, this is going to go to the moon. If it went to $140, why couldn't it go to 280?
Oh my God, that's so stupid.
That's right. So then this stock fell today. This red thing, it fell from 159 all the way down to, what is it now, $76. So there are people who misunderstand what's going on, who now they lost their house the other way.
Oh my God. So they weren't squeezed. They weren't squeezed.
Up.
Go ahead.
Yeah. Some people place a bet. They go, well, it went up so much. They go, it went up so much. It's got to go up more. It's got to go up more. It's going to go to 200. So I'm going to take out debt to go in long on this, and I'm going to make a ton of money. They're taking the opposite. They're not doing the short. They're going long now. Using debt.
So, wait.
And then the stock drops more than half of what it is. Now, here's the crazy thing, all right? So you could lose your shirt in that. It comes down. Now, this price that it's at right here, the price that it's at right now, is still above the all-time high of 2007. So you're going to lose your home twice over.
Oh, my God.
And the stock is still above all-time highs. Like, when I say this has never been done before, you can see, look at this chart. This never happened before.
Yeah.
You see any other giant spikes on this chart? No. No. This is a ruined chart. This chart's ruined from now on. You'll never be able to scale this properly. It's freaking crazy, all right? So it's a once in a lifetime thing that happened at the same time in both directions. Okay, so why am I talking about this?
Why are you talking about this?
Am I saying you get into GameStop? Get into GameStop? Don't buy a GameStop. Guys, if I had made you, don't buy GameStop. Forget the stock. Don't even think about touching that stock, okay? You don't know what's going to be like at tomorrow. It could be at $1,000. It could be a negative 12. You don't have any idea.
That's where you make the money.
If what you're getting from this,
no risk, no reward.
If that's what you're getting from this, we can turn this off right now and forget you ever heard the word. What I'm trying to tell you, though, is that this is not an unexpected occurrence. Even though it's a once-in-a-lifetime thing, you could tell that this potential existed because of how much shorting was going on and how many shares are out there.
Hey there, folks. Oh, hope you had a good time here today. Hope you enjoyed learning. I really liked learning. Look, you might be the type of person who's like, I don't really care about finance. I don't care about stocks. You should. I mean, a huge part of our system depends on it. And if you want to understand politics, if you want to understand education, if you want to understand healthcare, if you want to understand things, you got to understand how money flows. And so I think it's very important, which is why I included it in the show, which is why we included it in the show.